Hello everyone, my name is Muhammad Hassan Adabi, and in this video I want to fulfill the assignment of the final exam in course of International Finance by Prof. Roy Sample. So in this video I want to recap International Finance course from week 9 up to week 14. So let's start with the management of the current series. So I will talk about risk governance framework, risk management process, risk management and infrastructure. So the first one is risk governance framework. Risk governance framework is a structural policy that defines how a company is monitors and manage its exposure for foreign exchange risk. It assigns responsibilities, set limits, and define procedures. For example, a multinational company form a risk committee to review currency exposure reports monthly and set a hedging strategy. So most of the time, FMCG company using this kind of risk. Second is risk management process. It include identifying exposure. For example, is from export and import, measuring the potential financial impact, choosing tools is they gonna be used forward, swap, or options, and executing the risk mitigation. So, for example, a Singaporean-based company that imports electronic from Japan may hedge against Japanese yen appreciation by entering into forward contract. So, it can be used by a multinational company that the raw material is coming from the overseas. The third one is the last one is the risk management infrastructures. It's a tools, system, and organizational capabilities that help a secure and monitor risk mitigation effort. For example, a treasury management system or a TMS integrate with Bloomberg provide a real-time FX pro exposure, enabling instant decision. So it's more into tools that help a company or individual to take a decision while also maintaining the risk, which is in the example is Bloomberg using TMS to have an instant decision. And the second one, we talk about it's the chapter called Trend in International Business Finance. We will talk about the three of them. The first one is absolute versus comparative advantage. So, in a simple way, absolute advantage is, for example, is a country produce more efficiently when where while comparative advantage is a country produce at lower opportunity cost. So to make it easier, just I want to share you the example, which is for example, Brazil may have an absolute advantage in coffee due to its climate, while Bangladesh has comparative advantage in garment production due to labor costs. So absolute advantage is it's a fix, and in Brazil is the weather. It's good for a coffee to grow up. Well, in Bangladesh, it's actually have a more lower labor cost. So when we compare both of these advantages, is actually how they have an advantage by the fix, or for example, in this example is climate, and comparative advantage is the situation that happening. The second one is free trade versus fair trade. In simple way, free trade it promotes open market and remove the barriers, while fair trade is focused on ethical standard, fair wage, and sustainability. For example, a free trade agreement like ASEAN allow free flow of goods, while fair trade certifications ensure farmers in Africa are paid fairly for cocoa. So there is a word called free and a fair. Free it's more into the flow, and fair is more into how justice or how compensation going on. The last one is about the trade wars. So recently, China and United States having some of the intent issue about the tariff itself, and usually this kind of modern era, this kind of war, it's so usual to happen. So a trade war is basically countries impose a tariff or sanction in retaliations, disrupting the trade flow and impacting the market. And as I mentioned, the very famous example is between China and United States, not just recently but also many years ago. And um, let's talk about uh, the third chapters, which is international finance and practice. There is a currency exchange rate, foreign currency, and domestic currency. So currency exchange rate is show the value of one currency in terms of another. It affects profitability, pricing, and investment decision. For example, if the USD to IDR rates change from 15,000 to 16,000, Indonesia importers must pay more for American goods. Second is foreign currency. It's used in a cross-border trade and investment, but introduce risk due to the volatility. So, for example, an Indonesia exporter is paid in euro. If euro weakens before conversion to IDR, the firm earns less. And the last one is the domestic currency. It's a legal tender of a home country used for accounting, tax, and domestic transactions. For example, is Indonesian companies report profit in IDR even if they earn revenue in multiple currency. So whatever the currency that they get paid, they need to convert it to Indonesian rupiah because they are in the home country like and using legal like that. And the fourth one, which is the last chapter that talk in this semester, is the international direct and portfolio investment. It's we will talk about FDI, international diversifications, and competitive advantage from firm and a nation. So first about the FDI itself. So FDI is involving or involving acquiring or establishing business operation in another country. It's more into long term and strategic. So for example, if Samsung built a factory in Vietnam, this is FDI that create jobs and tech transfer. And recently, BYD is investing in Indonesia, so it's a good sign that could open the jobs and reduce the unemployment. And second is international diversifications. It's more into spreading investment globally to reduce country-specific risks. So not just investing a country where, there is saying that high risk, high return, and we must to have diversification to reduce our risk. For example, we invest in the United States, which is have a lower risk, rather than we invest in, for example, Cambodia, which is have a high risk. And the third one is a competitive advantage for firm and nation. So firm or nation can produce more efficiently or innovatively than competitors. For example, German Germany's engineering expect this give its auto industry a global advantage, like the company like BMW, Mercedes-Benz, Volkswagen, and so on. So when we talk about competitive advantage, we must know that some of the nation of our firm, it's having their own advantage. Either they create it or there are establishment of that. So German is so famous for, of the engineering itself, from the people, the government, and so on. So they will have advantage to the firm because they have a good talent to run the company. Yes. So that's the chapters that we talk in the class. Basically, because of this is gonna be the recap of the video, I also want to review what I learned in the first meeting after the midterm, which is just sort of the things. And what I remember the most is about the measurement of currency risk, how, like for example, sensitivity analysis, the regressions, it's used uh, to forecast the currency, and also how we see that what is the relationship between one to each other. And exchange rate forecasting, it's also interesting when we talk about how a simple walk in a short term could beat all all the prediction of the expert. Is because a simple walk is actually combining all those information, because expert or a person cannot do that, cannot do gathering all the information. So simple random walk is very uh, very easy and also more accurate rather than the expertise. So beside all of this, in the international finance, we also go to PT Astra Golesari to learn how actually companies using this international finance method to practically doing a business. And I am so happy to joining the company visit. I learned a lot from the directors, from the executive, and so on, about how it actually works. And to close this video, I would like to thanks to Prof. Roy Sample, who always makes the fun class and always be interactive to the students. And I am so grateful to have a teacher and also lectures like a Prof. Roy Sample, because sometimes people think that a finance it's a scary and very nightmare course from some of the people. But for example is making the video, or also in teaching the class very um, fun and also attractable. So thank you, and I'm so grateful that I'm joining these courses, which is international finance, and I hope I can learn more in the future, because making a mistake is the first step to make us learn more. Thank you.